Okay, what's up, tycoons? What's up, traders? Super excited for today's video. We're going to go over the FLUX token, ticker symbol FLUX. This is a viewer request. I do these viewer requests every single week. So if you want to see your token, your crypto in the next video, all you got to do is comment down below and I'll get to it as soon as I can. With that being said, make sure to smash that like button, subscribe to the channel. Please remember, none of this video is financial advice, rather just going over some of the live data by breaking through the charts and showing you guys some of the key levels that I'm watching, as well as how you can use things like the MACD, as well as the RSI, the relative strength index, to help spot potential entries and exits and really help better understand price action. So with that being said, we're going to jump straight into it. And currently you can see we're trading in this bearish channel right here. So, we're basically, bouncing off the trend lines on the bottom, bouncing off the trend lines on the top. And currently, there's this white dotted line that's right in the middle of this bearish channel. And you can see it's kind of been acting as a support level here over the past week. Now, currently we have something known as bullish divergence, which that's when, notice how the price of this token is essentially making a low and then an equal low over here, but the RSI is making a low and then a higher low. So we're actually increasing in relative strength on the price of this token as we're pretty much staying flat on the price. This is a term known as bullish divergence. We're bouncing off of the middle of this trend line here. So, today we're green. This token is up about 4% at the time of this recording. And I think that that's due a little bit to the technicals and this bullish divergence we have forming here. Now, when you combine that with the MACD, it becomes pretty useful because you can spot potential entries and exits based off of the MACD crossovers. So an entry signal would look something like this. When you see this red line here across above this blue line, right, that happens right over here on the chart. And you can see that it has a very strong run up shortly afterwards. Now, that was a short-lived rally. A lot of times you tend to see these really crazy wicks in crypto and a lot of the altcoins, the smaller altcoins. But that's a really good example of one right there. Over here, we see the same thing again, where this red line crosses up above that blue line at this time period, and we have a really, really strong rally up this time. Okay. And another good entry signal right there. And right here, when we see the red line cross below this blue line, that would be an exit signal. And you can see it had a pretty sharp drop all the way down from $1 down to about 60 cents per token, currently where we're at right now. So if you pay attention, the MACD is squeezing right now, and the red line and the blue line are basically even. So we're looking to see if the MACD can give us any kind of context or any kind of clues if we're about to curl up, and it could potentially give us an entry signal, or if this thing is about to cross to the downside and give us an exit signal. Okay. Now, if we get the exit signal, something you would look for on your MACD is you would look to see if this bearish or bullish divergence trend line continues to hold. And if it doesn't and it breaks and we get a MACD crossover to the downside, most likely we're going to come down here and test this 0.542 support level and potentially even break that and head down to our 0.429 support level. So those are the key levels to the downside that I'm watching. We do have a prior level of support of 0.631 that we rejected as support and actually broke through, and we're starting to flip it to resistance over here. About 4 trading days, we rejected that level as resistance. Now, you may notice that we have these series of yellow lines on the chart. And what these are is these are actually the Fibonacci retracements. We have the 61.8, the 50%, and the 38.2% levels. The reason we have these on here is because these are the 3 most common and well-respected retracement levels. And we use these because nothing moves in a straight line down or in a straight line up. Rather, you see a move down retracement, continuation of the trend, or you would see a move up retracement, continuation of that trend. So if we zoom out a little bit, we can see here that, here previously, okay, we had our major retracement levels in the past, right? We had a swing high up here, swing low, really, really sharp move to the downside. And then we retraced up all the way to the 61.8% level and then headed back down, and we rejected that level. So now we have a new swing high, and then we come down, we retraced up to our 61.8% level again. Now this is a wick right here, okay? But remember, the wicks doesn't mean that the candle closed there. So ultimately, we still rejected that 61.8% level and continued to head back down lower. And now we're hitting some of our bearish price targets to the downside, those key levels of support that I gave you guys. Now, just as I went over bullish divergence earlier, you actually can spot bearish divergence as well. And so this is where you can get some really, really good clues into helping to understand some of the price action in the markets whenever you're looking at them. All right. So in this case, what we have here is a total of about 3 signals that we're going to get some downwards pressure over here when we were trading around that $1.44 area. The first is the bullish or bearish divergence where we have a high here, and then we have another higher high here. So the token is clearly in an uptrend, but we have a high and a lower high at the same exact points where we have higher highs. So losing relative strength while the price of the token is going up. All right. So that would be like the first signal right there. And then number two is that we got a clean rejection here off of the 61.8% level, right? And so we know if we can't break through this and flip that to support from resistance, then ultimately we have a strong chance of continuing that downtrend. And number three, we have the MACD exit signal right over here, which is very shortly afterwards, we got the rejection at our 61.8. And very shortly afterwards, we had the bearish divergence. And you can see there was a very strong move to the downside to about the 40 cents region, all the way from $1.44. So ultimately, a really, really big move to the downside that if you're paying attention to just a couple of these simple indicators, right? The RSI, the MACD, the Fibonacci's, just using those three is really efficient, especially as a beginner, because trading is like going to battle. It's like going to war. You need to have the proper weapons and you need to know how to use those weapons so that way you can increase your odds of success on the battlefield. Hopefully you enjoyed this video. If you want to see your token in the next one, all you have to do is comment down below and I'll get to it as soon as I can. I do these viewer requests every week. So smash that like button and subscribe to the channel if you guys are new.